Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, March 18th, 2010. Well, again, markets are basically neutral on the day. You have maybe a little bit of downside, at least on the S&P and the Nasdaq. The Nasdaq is just fractionally lower, a couple pennies on the day, while the S&P 500 is down about 2.5 points or 0.2%. However, bucking the trend today, the Dow is up about 30 points on the day, almost 0.3% across the board. Now, a couple things to go over. What's driving the Dow today? Well, there are a couple key stocks that I will go over as you see the Spider's 10-minute intraday chart ahead of you, but nonetheless, I want to cover a couple different stocks. ExxonMobil, again, initially was leading the markets. It has come off those highs, although rebounding back up of late as the market has inched up in the afternoon trading here. Goldman Sachs is positive only by a little bit. That is holding steady right around the flat line. The real leaders, again, guys, you have 3M up over $1 today. Look at that chart on 3M. That is a key component of the Dow and giving a lot of momentum to the Dow here today. In addition, we can take a look at a couple other Dow components. Alcoa is near the lows of the day today. That is not giving any rise to the Dow, but basically neutral on the day, just down 11 cents. And you have DuPont. That is a key catalyst to the Dow's move today, although well off the highs, still up about 50 cents, which is a nice move. There are a couple other Dow components that are having solid days that are keeping this market up, at least on the Dow side overall. Now, the other catalyst going back to the SPY, folks, let's talk a little bit about the charts and what we're seeing today. Technically speaking, the markets remain near-term oversold. No doubt about it. The markets continue to really not have any significant down days in the last 3 weeks, at least, if not in the last 6 weeks. I mean, it's really been since February 5th, constant up move. I think you've had a total of 3 or 4 down days since February 5th, which is, again, basically 6 weeks ago at this point. However, having said that, what is keeping this market up? Well, there's obviously some key things that are doing that, and you can look, first of all, at volume. Volume, again, near the lightest it's been in years, and I mean that, folks. Again, this week is an extremely light volume week. We've done 112 million today on the volume. Yesterday was just as poor, although we did get the some key data late in the day, or at least a little bit of reversal in the markets late in the day to cause some selling volume. But nonetheless, look at today. Look at the volume here, just over here, guys. Look at that trail off in the early afternoon session here. We are approaching 2 p.m. Eastern time, and the volume is just dead on the day. Why is that keeping the market up? Well, you basically have the psychology of the markets here at work. And again, you can make a case that there's propping going on, and I'm sure there is. Whether it's backside deals with institutions or not. Also, you have other factors involved with the light volume that are keeping things up on Options X week. But nonetheless, just focusing in on Options X, you have to say to yourself, very rare to see this light volume. This is the way it was last Options X as well, but usually you have more volume on Options X. That's the general way it goes on the week of options expiration. Now, volume continues to be extremely light. And again, the psychology of the markets dictate if you don't have any sellers, the market will move higher. Why? Because the general public will always be slightly bullish. It's just the nature of the beast that people are positive. And as I always say, if you're not positive, then you're depressed, and therefore they medicate you to make you positive. So always remember that little bit of psychology of the markets, when volume is this light, will generally keep the markets neutral to positive. And that's, again, what we're seeing essentially here today, a neutral day. Spiders are down 29 cents right now. We are coming back in. Now, notice the technicals. Let's talk some technicals right now. Why do you think the market reversed right here? I mean, it didn't quite hit the 50 moving average, got above the 20. That looked bullish at first to get above the 20. Why do you think it reversed there? Can anyone pinpoint that? And again, you should be looking at the chart and seeing if you can. I will draw in the line to tell you. Well, take a look from the high yesterday. Draw that line in, connect it to today's highs, and look at that. Here it is connecting to here and right through. That's exactly why you're coming back in now off that level and selling back towards the pivot low or gap window here. Now, yesterday, look at this. Yesterday, we opened up here. We went up a good 3/4 of the day and then sold sharply later in the day as the dollar got a small bid before the bounce right into the close. Today, we started to retrace down, bounced, retrace down into that double bottom. You got intra-candle here and closing below that level. But this is key, guys. The in-the-money stocks confirmation signal. This is one of the key technical values that we utilize and teach in our research center. You need to learn this. This is one of the biggest things. As you can see here, we hit this line, we hit it right again and pierce it here, we close above it. That creates a bottoming tail. That's number one. Secondly, you trail off and you come down here and close below. Now, you didn't take out the bottoming tail. Taking out the bottoming tail would have been bearish. As long as you hold that bottoming tail in place, it's bullish in short term. In addition, you close below this trend line, close below the gap window, but you confirm it in the next candle. And this is where the key analysis comes in. The next candle does not give you the confirmation signal. Therefore, you have to continue to look on the bullish side of the market. Why? Because you're still inside of this tail of this in spirit of or good bottoming tail on the chart. So again, look at that, understand that. If you don't understand it, it's another good reason to join the Research Center, as we do teach it and go over all these techniques that we've utilized and have created that are unique to In the Money stocks to help you navigate through this market. All right, so again, sure enough, no confirmation. What happens? Market pops up. And that's exactly what no confirmation tells you. When you don't confirm, when you stay inside of the tail of an in spirit of or bottoming tail right there, you can see clearly that the market will reverse, and that's exactly your reasoning why it does. And sure enough, it pops all the way up, goes right up here, and then you start to sell off at this point and come off this trend line. So that tells you the technicals of the market right now. You could make a case that you have a little bit of a triangular pattern right now. Take a look at this. What are you doing? Look at this. Connect this right through here. All right, you can make a case that this connector with this there creates a little bit of a triangular pattern. With triangle patterns, you generally look for which way it breaks. If it confirms that way, it will continue that way for a substantial amount of time, possibly an hour or two on an intraday chart. It could continue to move in that direction. So you're really watching here towards the later afternoon session. Which way does this break? You have the sloping down yellow line, you have the sloping up yellow line. Which way does the triangle break to the downside or the upside? And that should give us a continued move in that direction. In addition, you have to favor, and again, guys, I say this almost every day, but you have to continue to favor neutral to positive in the interim basis here because the volume is so light. I mean, again, this volume for this week will rival last week's volume. Last week's volume was in the top 10 for lightest volume weeks in the last 6 years. And I mean that seriously, folks. That is an insane number. What that tells you, folks, is it should be the midsummer doldrums, but we're not. We're in March. So again, it tells you there's something fishy going on there with the markets, that there's just no kind of playful nature of the institutions. The institutions aren't really trading here. They're not selling the market. They're not shorting it. They're not buying it. They're just sitting on the sidelines. If someone told them to sit on the sidelines, please don't participate. We'll just continue to keep the market up. And again, you can look at that. And again, the blatant kind of manipulation that's going on out there is pretty obvious at this point, as long as you're a trader and you can see it. Anyone who's average out there who kind of just does the 9-to-5 job, doesn't really look at the markets, will never see this. But again, the nature of the beast here continues to show us that there is significant manipulation in the market. And that's just what you have to go by. I mean, there's nothing you can really do about it at this point. Just continue to watch. Ultimately, it will fall apart, and then you have to be very, very worried for the whole economy as well as the markets. But for now, anyways, they're content to hold it. And you can see right away, light volume, no volume. Look at the volume here. It's ridiculous. Absolutely ridiculous. But nonetheless, market's getting floated up. That's the light volume effect, folks, of keeping this market positive. Now, if you break the triangle to the upside here, you have to continue to look for the upside to continue to complete. Essentially, to complete this, you have to close above that yellow line and confirm it, and therefore you should go to the highs of the day today by the end of the day, if that's the case, okay? Watch that again very closely, folks. Understand confirmation, understand triangular patterns and where they break and how they break. This is all stuff in the Research Center you will be able to learn. We do teach day in, day out. 40-minute nightly videos, just one part of the Research Center. Unique everyday analysis, going over everything from the markets to stocks, to the dollar, to oil, to gold, you name it. It's covered technically speaking, and we discuss the markets overall over the course of the day. So keep an eye on this triangular pattern, folks, depending on which way it breaks. So in any case, follow that. Let's go take a look at a couple stocks quickly here. Number one, Goldman Sachs. Goldman Sachs has moved to the positive side after being negative just about an hour ago. It has come back very substantially, making a little bit of an in spirit of bull flag pattern right here, which again bodes positively for the afternoon session. JP Morgan, though, is still under pressure. Granted, it is off the lows of the day. As you can see, it went right down to that 200 moving average here on the chart, right down here, and reversed beautifully. And by the way, that's a buying opportunity. First hit of the 200 moving average, scalp that. Look at that move up on a scalp, and then it starts to pull back beautifully as well. But nonetheless, pulling back a little bit, still down 38 cents on the day. So JPM, after a big day yesterday, is giving a lot of that back. Apple Computer, you would think Apple would be one of the stronger stocks today. It is not. The ugly rollover is actually creating what I would call an in spirit of bearish triangular pattern. Why do I say that? Well, take a look at this. All right, you can generally make a little bit of a triangular pattern here, and it's all off of this downward move. So you have this downward move here, and then a sideways choppy consolidation with an in spirit of pattern. And you can see Apple's actually trying to break down here, and this is a very bearish pattern here, folks. Very bearish. Even though it's choppy, it's still inside of this big down move yesterday, and that's actually bearish for Apple. So keep an eye on Apple. Again, if it breaks below this triangular pattern, you could have a little bit of trouble in the near term. Maybe a retest of the lows of the day at around 222.61, which would be another dollar lower than where we currently sit on Apple Computer. Today, looking at some other plays, research in motion is flat. Amazon is having a good day. AMZN, here's the chart of AMZN. It is coming in a little bit, but nonetheless, still holding up there, guys. Still positive on the day, still strong on the day on Amazon.com. Google is basically flat to positive, up $1 today on a $565, $66 stock. That is basically as flat as you can get. Same thing as a $20 stock basically being up a penny or two. So, I mean, that's what we have right now, having to deal with Google right now. Not a big move. Same kind of general chart, though, as Google is Apple. I mean, look at this. Down move and then somewhat of a triangular pattern. I mean, look at that right there. So down move, choppy, sideways consolidation. That is slightly bearish again on the Google chart, just like Apple's. It needs to be watched. Again, I'm seeing a lot of weakness in the technology sector, a mid-level of weakness and strength in the financials. And again, the SMH is what you really want to watch, and the SMH is pulling back today about 29 cents. Now, again, folks, the dollar has risen insanely here. I want to show you this dollar chart. Look at the dollar ripping up today. The amazing thing about this is that it did not have a big impact on the markets, which leads me to continue to believe that there's a significant amount of manipulation in the markets, folks. All right, when the dollar rips up, in general, the markets tank. Today it ripped up, the markets barely dropped. They dropped a little bit, only minor. Dow went down maybe at the lowest point, down a few points on the day, and then has reversed to be positive right now. But overall, dollar moving up does not seem to have an impact. It's only when the dollar moves down, the markets seem to get a bid. That is continuing to show us some sort of manipulational factor in the markets that's keeping it that way. Again, I'll discuss the manipulation more in depth in the Research Center Nightly video tonight, but nonetheless, it is unbelievable at this